This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome to Research Talks podcast on Stockbox here with Alan Green. Good day to you again, Alan. How are you doing?
I'm fine, thank you, Mark. Yes, another bright, sunny Friday, thankfully, after all the rain and storms we've had this week down the southeast.
Oh, well, good for you. It's not bright and sunny here. It's grey and overcast. I've also had the rain, though, so hopefully I'm only a day behind you. Maybe tomorrow at the weekend I'll get the bright and sunny winter anticyclonic weather.
Bright and sunny, yeah. The anticyclonic weather. So you'll be central.
Okay, good.
In the centre of the low pressure patch, which will be great, or is it high pressure? I forget now anyway. But
anticyclonic, yes, high pressure. Yeah, it makes the sea flattens the seas. From my Navy days. Yeah, I used to like those days because the seas would be pressed flat and you weren't going to get sick.
Yep, indeed. Yeah, a nice smooth voyage.
Indeed. Well, talking about smooth voyages, we were talking earlier about Harland and Wolf. Are going to be talking about them today, and they've got a vast history in shipbuilding, and of course had some very significant news recently, and the share price doing extremely well. I think over 100% over this week. And then ECR Minerals, you're going to bring us up to speed on some of the updates from what's going on over there. So. Yeah, I'm looking forward to this. Tell me all about, give me the investment case for Harland and Wolf.
Well, Harland and Wolf, what a name, what a company. Of course, visually, I think the gantries and the cranes on the docks in Belfast, those big yellow gantries, have been the backdrop for so many drama series on television and used in films, of course. So the name is synonymous with those gantries, of course, and I think the name has, the actual brand itself has risen above just the general reputation the company has in business as being a shipbuilder and a company with an amazing heritage. It's become a brand that's synonymous with Belfast. But this is a really old company, founded in 1861 by Sir Edward Harland and Gustav Wolff. The company has this incredible heritage of building ships. It built the Titanic, of course. We were talking about that, and it was a fine ship. It was unsinkable, but of course, human error and a collision with an iceberg put paid to that reputation. But they've also built the RMS Olympic, the Her Majesty's Britannic, of course, the Royal Yacht. They built the SS Canberra. The Myrina supertanker was the first supertanker built in the UK, but they have a vast array of assets and capabilities. They're a maritime and offshore fabrication company. Of course, I've mentioned the Belfast docks, one of the largest dry docks in Europe. But they also have a number of divisions. They have the energy division, which can bring oil rigs in to be worked on in that dry dock. They also own the Harland and Wolf Appledore. That's the dock in Appledore in Devon, and that's a ship repair and shipbuilding facility. And in 2021, they acquired the Methil, so that's Harland and Wolf Methil, that's on the east coast of Scotland, and Arnish, which is on the west coast of Scotland, which gives them the resource to provide fabrication both in the energy and defence sectors. The company also has investments into what it owns, the Island McGee storage project. This is a huge gas storage project, which at its peak will supply up to 25% of the UK's natural gas storage capacity. So given where we are with this current global energy crisis, the H&W could very much be on the cusp of some very lucrative income from that sector as well. So to summarize the group's offering, in the energy sector, they look after, they can fabricate and supply fabrication on oil rigs and offshore constructions. the defence of naval shipping work, which is really at the heart of why we've seen this huge explosion in value in recent weeks. They also, of course, undertake work that they build cruise ships, they build and maintain and refurbish ferries and large fishing boats and so on. They will also undertake work on bridges. So there's building, of course, steel fabrication, loading frames, and so on. And they also have a renewable energy division, which of course is involved in building and fabricating those huge wind turbines that we see offshore. So a very comprehensive fabrication and engineering offering. John Wood, of course, is the Chief Executive Officer. John has been in the business for many years, in the oil and gas business. He's held senior posts with BAE Systems. More recently, head of oil and gas with Oricon, the global engineering and advisory company. The company prior to H&W Holdings or Harland and Wolf Holdings was, of course, Infrastrata PLC. Investors may well remember that name, and it evolved into Harland and Wolf Holdings. So we have Aaron Rahman, who's the Chief Executive Officer. I know Rahman sort of personally from some work with a previous company. Malcolm Grote, the chairman. Of course, we spoke about Malcolm in his capacity as chairman with another company, Tomco Energy, recently. And Andrew has many years' experience within the city, holding chief finance officer, chief ops, and chief exec roles in various companies. So, and there's a huge board of people and the management team behind him. We've also got Sir Jonathan Band as non-exec on the board as well. Katya Zatova also there as non-exec. So, if we look at the share price, I mean, it's going back to 2019. The shares were peaking out at just over 155 pence, in fact, on the 18th of Jan 2019. And then, of course, you go into COVID and a company like Harland and Wolf faces the perfect storm. It simply can't do work. So, of course, that was reflected in the share price. So in order to keep itself going, it has entered into financing arrangements. And most recently, on November the 7th or November the 9th, the company announced the refinancing of the 70 million Riverstone facility to create a 100 million facility with Astra Asset Management on far more flexible terms. And I think those flexible terms will suit it well, given the seismic changes that the company's undergone in recent years, in recent weeks rather. But it's important, I think, to understand that prior to the contract that everyone's talking about, which of course is the Team Resolute contract, the 1.6 billion contract win with the Ministry of Defence to build three vessels for the Royal Fleet Auxiliary. I'll come to that a little later. It's important, I think, to understand that actually the company was doing pretty well anyway prior to this arriving. And that success, I think, is only just now starting to be reflected in the share price. The company gave a trading update on August the 16th, and it's announced that it had secured 3 material contracts in quick succession. So that there are two different contracts with Corey. Firstly, an £8.5 million contract, then a 9.6 million contract. Those were announced during the summer. Then the contract to regenerate the M55 motorway. That's a contract worth 55 million. So on the basis of that work, the company said it was very comfortable with its guidance for revenues on the current year of between 65 and 75 million. And it then said with other contracts in the pipeline, it expected revenues of between 100 and 115 million for 2023, then 200 to 230 million for 2023 to 2024. And given that the company and its interim to September announced that its gross margins were holding firm at 22%, that equates roughly with a share price of around 30p before anything has come in on the back of the Team Resolute contract, which I'll get to shortly. So in these interims, the company announced revenues of 15.4 million. That's up from 4.4 million, 4.1 million previously. Of course, those are just the contracts the company was allowed to continue working on during COVID. So there's an operating loss off the back of that. But the company also announced with its infrastructure arm a new contract to provide space frames for a company operating in Greenland, a mining company operating in Greenland. So bit of a crossover. You know, we obviously don't know which company this is. It wasn't in the announcement, but it gives you some idea of the diversity of work that Harland and Wolff is able to undertake, and of course the diversity of work it will be able to take on going forward. So also in November, the company I mentioned the gas storage project, the Island McGee project. There is a court case in regard to the company being able to proceed with utilizing the storage facility. That the outcome of that court case has been deferred to January, but the board are confident of a positive outcome, particularly, as I said at the start, we have this backdrop of the energy crisis in the UK, and storage of gas is going to be vital to the fortunes of the UK going forward. So in November, the company announced that it had become the preferred bidder for a contract to the Ministry of Defence to build 3 support ships for the Royal Fleet Auxiliary. And of course, these are 3 very modern ships that will supply munitions, stores, and provisions to the naval ships at sea. So hugely important. Now, Team Resolute is the 3 companies involved with the bidding with the bidding process, and that's of course Harland and Wolff and Navantia and BMT. As a result of that contract, through the contract, there will be £77 million worth of investment into Harland and Wolff. And what that means is that money will go to expanding the existing dry dock facility and the other facilities it has. It will also involve an upskilling of workforce. So this will make Harland and Wolff even more competitive when it comes to tendering for other contracts overseas. So it's a hugely significant step. And John Wood said at the time that you know, it was a defining moment for the company, and the company looks forward to a very material portion of this £1.6 billion contract. So they're going to get a huge chunk of this money in, and this money. And when you look at the existing forecast that we were discussing, which is of course 200 to 230 million for 2023-24, that doesn't take into account any of the money that's coming in from this new contract. But I think what's exciting is that this new contract could be the first of many. So we could see the company being competitive to tender for contracts elsewhere in the world, involving some similar sums of money, and it could be transformational for the group. So what sort of value do you place on that? Well, I mean, we currently have the shares trading at around 25p, 25 to 26p, giving the company a market capitalization of just 43 million. But I think based on this new contract, based on what's coming up, and also the contracts that the company will win off the back of being selected by the MOD to build these ships, I think, you know, we're looking at a company that's still materially undervalued and could go on to, you know, if we go back to those year highs in 2019 when the shares were trading over 150p, I think that's probably where the company could say fair value could be achieved at those levels.
Excellent. Well, thank you for that. I had no idea really of the vast history, and it's a very known name, isn't it? But they've got a huge history there. I didn't know they built the Titanic or were involved with the Royal Yacht Britannia. So a huge, vast history there in shipbuilding. But of course, the energy division as well. You've talked about the gas storage as well. Lots of different things going on. A defining moment, if that's what the CEO John Wood said, then yeah, I tend to agree. I mean, does preferred bidder status mean you've got the job, or does it just mean you are more likely to get it? Is that what it means? Yeah. Okay.
I mean, the thing is, the infrastructure is all there. This is going to create 1,200 jobs. I think in Belfast, and there are so many. It's a huge contract win. So when a contract like this is being awarded by the MOD, obviously it's looking at the workforce. What benefits that will bring to in terms of prosperity for the region, all the rest of it. So that's a defining moment for the company, and also also for the area as well, because Harland and Wolf has this great history. But now it's diversified. It's rebuilding, it's maintaining ferries. It also gets engaged in the decommissioning process of older ships. Of course, that in itself is a big job. Taking those old ships apart again. It's regenerating the M55. There'll be other contracts coming from that way too. So you just look at the diversity and in the capabilities of the group and what it could be doing. Just on another footing altogether. Joe Biden announced this 1.6 trillion infrastructure bill to regenerate areas in the US, and of course, central USA. There are lots of very old, and the road infrastructure is very poor. You've got lots of very old steel structures that are probably inherently unsafe. That's all got to be replaced. So that puts a company like Harland and Wolff very much, center stage to potentially be a very competitive bidder for that, particularly given the work that it's already doing and the work that has been awarded. So it's a really exciting and pivotal time for the group, and I think we're going to see a major revaluation in the coming weeks.
It is surprising, a big name like that and the work they're involved in, to see the market cap there. I mean, even now at 44 million, did you say? But just give it earlier 43 earlier in the week, it was sort of sub 30 million. Did you said they ran into, not ran into problems, but was it COVID that kind of knocked them back quite a bit?
Yeah, I mean, COVID was the perfect storm. 2019, the shares were trading. The shares were trading at 154p. So that's 18th of January 2019. And then of course COVID came along, and the following year, and knocked everything into a cocked hat. And that of course has been the primary issue for the group, and it's had to refinance during that time. So of course the refinancing and the debt has weighed on the share price. But I think where we are now, there's the very real possibility that debt could get paid down very early, or will get paid down very early, and then the company's in an incredibly strong position to carry on investing. It can tender for contracts that perhaps it wouldn't have considered tendering for beforehand, simply because the infrastructure maybe wasn't up to date enough, or it didn't have the skills across the workforce. But of course, all of this will now be, this is going to take place over the next few years. So of course, maybe it'll take time for the share price to catch up with events in that regard. But certainly, I think where the company's at now and the current market capitalization, it offers a very exciting opportunity to get engaged in a great name, a great bit of history, and also something that's going to really contribute to the prosperity of some of the industrialized regions in the UK.
Excellent. Well, thank you very much for presenting that case very succinctly for us, Alan. And let's see how they do. But significant news this week for sure. And I would tend to agree on a good, compelling investment case there. One to actually get a fair bit of capital growth, but then you're in a company there that's a significant player in the defence and infrastructure business globally, really. So you hold that one for a while. It's a dividend payer, and it's a pension fund, isn't it, for you? So
it is. Yeah.
Very happy with that.
It's on so many levels. I think H&W does offer a very exciting investment opportunity right now.
Excellent. Okay, well, let's talk then about something that's a bit more speculative. Looking for gold, exploring for gold. ECR Minerals, then. What's the latest on ECR?
Well, ECR Minerals have undergone a fairly, certainly after CEO former chief executive Craig Brown passed away October last year. It's undergone a challenging year, I think we can say. But new chief executive Andrew Haythorpe came in the spring this year, and Andrew has got a great track record of delivering growth and transforming companies. So he's been a great appointment for the company. Andrew previously has worked with investment banks. He's also worked as an analyst, so he's been on both sides. He's held a number of senior management positions in other mining companies, and then was appointed chief executive of Crescent Mining, which he took from an $8 million gold explorer to a $250 million gold explorer. So he's got an innate understanding of what it takes to take a company forward, what's required to develop that company, and see it evolve from explorer into producer. So the fact he's taken this role at ECR is hugely significant, and I think what the markets are now seeing, Andrew's only recently put his stamp on the company in terms of his vision, and I think we've seen a number of developments over the past few weeks that really manifestly show what his plans are for the company. So just to look at the projects to start with, of course, ECR are very well known amongst the investing community for their work in Victoria. They have two major projects there: the Bayliston project, which of course they've undertaken an awful lot of drilling and exploration work this year. They have their own Midas drill rig, which they've employed, and their drill team, of course, which means they're not reliant on waiting for other contractors to come in. In fact, they also have a second drill rig, which they've acquired from a company called Cortec in China, and that will be at Melbourne Port sometime in the next few weeks. They'll be able to commission that and get that onto the projects that they are working on and developing. So I mentioned Bayliston. Of course, one of the key assets from that is the Blue Moon asset, and we had an update from Blue Moon. Now, when Andrew joined the company at the start of the year, he spent a long time looking over the projects. He went out with Adam Jones, the technical director who's overseeing and managing the drill campaigns for the company. He went out and looked at all these assets, and at Bayliston, he was particularly struck by Blue Moon, simply because as we often hear, we'll often hear drill reports from companies where the drill goes down. We get some grade out of the ground, and it's a good grade, and it's across a very small area. With Blue Moon, Andrew saw with the previous work done there that the mineralization was across a large area, so some 7 to 15 meters, which potentially puts it straight into commercial grade status. So we heard yesterday that the company had just had results from the first drill hole back from Blue Moon, and what the company did, it followed up on a reverse circulation drilling campaign undertaken in 2019, and also the company's basically followed up those RC drilling holes with diamond drill holes. There are three more holes we're waiting for results for, and one of those holes is also out further west from where the drilling was done previously, where there are indications of a big ore body which runs west from the existing drill site. So we got the results back. The results were I don't think they sort of blew the doors off, but 500,000, that's 7.29 grams per ton of gold from 96 meters down. We've got three more results to come back, as I say, from that. And I think once the company said yesterday that they're very encouraged by this. The program was designed to test for the mineralized continuity of the Blue Moon gold bearing structure, and the first hole bears out what they've seen so far, so it's in line with expectations, and that's very significant. I think the markets, of course, will want to wait and see what the holes 2, 3, and 4 look like in terms of mineralization. But once they've got those results back, then of course the company will then make a decision on where to drill next and the next steps to be taken. So that's a big step forward for them. The other project they're active on in Victoria at the moment is the Creswick project, and this is north of Ballarat. And Ballarat has its own very famous gold mine, of course. It's a narrow vein mine, and it's been producing for years. There are also many other historic gold mines dotted around that region too, and historic gold workings. And Andrew Haythorpe visited Creswick with Adam Jones, and on the basis of what he saw there, he ordered a retest of the samples that had previously been taken, and they came back with some pretty spectacular results. So it was a duplicate sampling of intercepts from the diamond drilling campaign, and they saw a number of intercepts: 7 meters at 47.75 grams per ton, 1 meter at 6.13 grams per ton. And Andrew said at the time, and Adam Jones also commented too, that the duplicate samples reveal the high variability of the coarse gold that's present in the ground there. And this is it almost replicates what the miners find at the Ballarat mine, which is a big block of gold here, nothing there. And it's just the nature of the terrain and the mineralization with the terrain. But on the back of that, and Andrew and the team said that Creswick's a valuable asset with great potential, and they and obviously once they are planning now a campaign for next year to further develop Creswick and hopefully fully realise the potential. Also, worth noting there that the company has a property at Brewing Lane in an area called Springmount. On that land, they have access to an old gold mine, so logistically, they're very well placed to get their own equipment onto the ground there and to conduct drilling work without having to go through the lengthy process of applying to work on land and so on. So it's a very significant part of the ECR strategy. Also in Victoria too, Andrew mentioned in an interview yesterday that the Omeo asset, and this of course is in the Tambo, the Tambo prospect, for which a license was recently awarded, and the company said, they're looking forward to getting down there. They've not even got on the ground there yet. And this was an asset that was identified by previous geologists that worked with the company, who'd done his university thesis work there. And there's lots of there are lots of pockets of gold and also previous mine workings in the area too. And that's to the east of Victoria. So again, that will become part of the work plan for next year. So we then move from Victoria, we move up to Queensland, where the company acquired 3 license areas in the Lulworth Range, which is close to a number of active gold mines. In that region, you've got the Charters Towers gold mine, which is a very active mine, the Ravenswood mine, and this is an area close to an area called Pentland. And the team on the ground there have undertaken soil sampling and stream sediment sampling. Lots of pictures on their social media accounts that you can look back through and see the type of environment and the type of terrain. The soil sampling that they've undertaken, they've seen visible gold in many samples, and those results are currently with the lab. They've got about 200 samples in total. So once those start to come back in, Adam Jones also said in an interview yesterday that they're sending the team back out onto the ground at Lulworth. So this is really exciting stuff. And they've got, of course, a new rig arriving. So I've no doubt that once they identify gold targets up there, they'll be up there drilling with the new rig. So we then come to Andrew putting his stamp on the company, and this is the redevelopment of Creswick, hugely important. But in an area where Andrew went to university and also undertook some work with a previous company. The company announced an option to acquire the issued share capital of Placer Gold, and this is at the end of October. Now, Placer Gold are the owners of what's called the Hurricane Project, where a tremendous amount of work has already been undertaken. Lots of field work's been undertaken there, and it's considered to be a late-stage exploration project with 3 tenements highly prospective for gold and antimony. It's in the Hodgkinson province in northeastern Queensland, and there are several goldfields up there, including Palmer River, West Normanby, and Hodgkinson, which have produced more than 45 tons of gold from alluvial workings in the area and mines. So the announcement detailed the background to Hurricane and said that it doesn't currently have a JORC compliant resource, but the board with the work that's already been done there, and this is work that was undertaken by Andrew Haythorpe and a team he worked with in a previous company he worked for, and they were focusing on this particular area. So there's a great degree of physical, there's a huge amount of physical mineralization that can be seen actually as you walk across the region. Numerous rock chip sampling results, and the company said in the announcement that with these results and the rock chip sampling results, it fully supports additional exploration and study work focusing on mine development. So what that says to me is that they know that the asset contains gold and antimony in commercial quantities that warrant a mine being built there, which is great. But what ECR have done, they've structured an option to acquire Placer Gold, the owner of the Hurricane Project, by paying a fee of about 200,000 Australian dollars, and this will be satisfied by a contribution costs, which involves an initial fee of 39,500 Australian dollars, about 22,000 pounds, and that goes towards ECR's payment of the option fee. So it also includes that the work team on the ground. So I imagine that the work team the field team that have just recently been deployed back to Lulworth will probably go up to Hurricane after they complete Lulworth. Lulworth's about 300 to 400 kilometers south of the Hurricane Project. So obviously it's in terms of Australia, it's very much, it's just down the road, literally. So this is a huge step for ECR in terms of acquiring a late stage project, but really without the risk, because yeah, they're spending 200,000 Australian dollars, but that means they'll have their field team on the ground. The work can be done to establish a JORC compliant resource and plan a mine out without, and only once they're absolutely 100% certain that they can literally just flick a switch and build a mine, do they then complete the acquisition. And that's hugely significant. It's a very canny move by the company, and I think obviously if the option fee is fully satisfied, then the total acquisition will reach just under 7 million Australian dollars. But I think when you've got a gold mine there, I think that will be a small change compared to what could potentially come out of the ground. So this is the Andrew Haythorpe dimension now to ECR, which is a huge step forward. In terms of cash, I mentioned the property at Creswick. The company has 2 more properties. It has a property at Baillieston, which is at the Ngambia Rushworth Road. It also has the property, as I say, at Creswick, and it also has an asset in the Philippines too, which is a gold. It's the Dangley Gold Project with some 63,000 ounces of gold in the ground there, and the company have indicated that they're seeking to move this on. So whether that will take place or not remains to be seen. But what it does mean is that if it needs to, the company has plenty of cash in the bank and it's fully funded really for the foreseeable future. And if it needs to, it can sell another property, or if the Dangley sale does eventually go through, of course, it'll bring cash, or maybe a combination of cash and shares in for that too. So the company, the share price of ECR is currently just over a penny, giving the company a market capitalization of 11.5 million. Now, we've got Creswick, we've got Blue Moon, we've got Lulworth Range, and we've now got the Hurricane project. This is all late stage stuff. So I think the shares are an absolute bargain where they are, because the near-term news flow from the company, I think, is going to be very exciting indeed. We've got results from Blue Moon, which will be through before Christmas. Hopefully a further plan to deal with Creswick, and then of course we'll get the rock sampling results and the stream sediment sampling results back from Lulworth, and then up to Hurricane. There's going to be a lot of stuff coming up in the next few months. Yeah,
sounds like it, Alan. There's an awful lot going on, isn't there at ECR? You've really gone through everything there in a lot of detail. So that's good to hear. It's been a long time sort of coming with regards to all the changes that have gone on there at ECR, and shareholders have been sort of fairly patient, but also frustrated, I think, with perhaps a lack of direction. But as you say, the Andrew Haythorpe kind of effect or management is coming through. So let's see what happens there, I think.
Yeah, it's taken time because, of course, you come in, Craig. We all remember Craig Brown, who's he was a larger than life character, and he engaged with investors and was very, he was an inspirational character. Andrew is a completely different kettle of fish, but he's very focused. He's got his track record speaks for itself, and I think that's what is now really exciting investors that know about this company. And it's also why you've got major shareholder like Colin Braidwood quite happy to sit on his holding, and he's up to, I think, about 11% of the company now. So there's a lot of support from shareholders, and the deal they've structured, particularly with Hurricane, I think is really exciting because it's a late stage project. Certainly Creswick and Blue Moon, Baillieston, these are earlier, as is Lulworth, of course. But when you've got the opportunity to, by September next year, if ECR completes its option to acquire Placer Gold, that means that probably the plan to build a mine there will be in place, and works could even have started. Who knows?
Excellent. Well, thank you very much, Alan, again for your time on doing this podcast, the Research Talks podcast, talking to us about ECR Minerals and Harland and Wolf. And again, I wish you a very pleasant weekend. By the way, how did your concert go last weekend? It was Friday, wasn't it? You were heading out, yeah.
Yes, it was fantastic. I mean, I rarely travel to see bands live nowadays because I've seen so many over the years, but this particular band, I mean, I do like my prog rock, Genesis, Pink Floyd, all that. But this is a band called Porcupine Tree that managed to fuse all of those elements together, and they were fantastic. And the Wembley Arena was sold out, and it was reported in the Times as a glorious prog rock fest. It was technically a brilliant concert. I also like seeing good musicians on stage, and these guys are the very best, the top of their game. So if you get a chance, have a listen to their music and go and see them.
Okay. Well, that's good to hear. Well, enjoy your weekend. I hope the weather does stay nice and blue sky and sunny. And we will catch up again in a week's time.
We'll catch up next week. Okay, Mark. Cheers.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.